Astute investors can still find chances for big returns in a stock market that is prone to volatility and corrections. This video lists 5 stocks that could replicate Nvidia's stellar success and are expected to expand in 2025. Come explore these investing options with us and learn about other market trends. The stock market has seen some significant ups and downs lately. With the S&P 500 dropping around 45% since its peak in December, many investors are feeling the heat. But the truth is, even in these turbulent times, there are still opportunities for savvy investors to make smart moves. If you're truly curious about investing, I've found Interactive Broker's platform helpful in my own journey. You can find it linked below. Go ahead and check it out. What's driving this volatility? Economic factors like inflation and interest rates are definitely playing a role. Investors are increasingly cautious, but that doesn't mean there aren't solid investments to be found. It's all about knowing where to look and understanding the trends shaping the market. Currently, sectors like cybersecurity, logistics automation, and semiconductor manufacturing are gaining traction. As companies adapt to changing technologies and consumer demands, these areas are ripe for investment. Staying informed about these trends can give you a leg up in finding the next big stock to watch. In a shaky market, research isn't just helpful, it's essential. With prices fluctuating and uncertainty looming, taking the time to dig deep into your investments can make all the difference. Understanding a company's fundamentals, market position, and growth potential can help you make informed decisions. Investors often rush into trends without doing their homework, leading to poor choices. By focusing on in-depth research, you can identify undervalued stocks and emerging opportunities that others might overlook. Moreover, keeping an eye on news and developments in your chosen sectors can alert you to shifts that may impact your investments. The more informed you are, the better equipped you'll be to navigate the ups and downs of the market. Cybersecurity, a growing investment theme. Cybersecurity is a crucial investment theme, not merely a trendy term. Companies are increasing their investment in security solutions as a result of the sophistication of cyber attacks. This is where savvy investors can find great opportunities. Take Fortinet, FT&T, for instance. Known for its industry-leading profitability, Fortinet is a solid player in the cybersecurity space. While its revenue growth may lag behind some competitors, its strong operating margins and attractive valuation make it worth considering. The reality is, cyber attacks are not going away anytime soon. As businesses and individuals alike seek to protect their data, investing in cybersecurity stocks is a smart move for those looking to capitalize on this growing market. Spotlight on Symbotic, automation in logistics. Symbotic SEM is another company worth your attention, especially with its innovative approach to logistics. This firm is using AI-powered robotics to transform warehouse operations, and the potential here is massive. With partnerships like the one it has with Walmart, Symbotic is well-positioned to tap into a $432 billion market for robotic systems in warehouses. The efficiency gains from automation are substantial, and as installation times decrease, we can expect revenue to grow significantly. Despite some past financial turbulence, Symbotic's impressive backlog of $23 billion indicates a strong future. As logistics needs continue to evolve, companies that can innovate and streamline operations will be in high demand. Advanced micro devices. Opportunities amidst competition. Advanced Micro Devices, AMD, is another exciting stock to watch. While it's often overshadowed by Nvidia, AMD is carving out its own space in the semiconductor industry with promising growth projections. With a forecasted 26% revenue growth this year, AMD is positioned to thrive, especially as Nvidia faces supply chain issues. This creates a golden opportunity for AMD to capture market share and grow its revenue significantly. Investing in AMD could be a savvy move, particularly as it trades at a more reasonable valuation compared to its competitors. If you're looking for tech stocks with growth potential, AMD should be on your radar. Salesforce, capitalizing on AI potential. Salesforce, CRM, has long been a staple in the tech world, and its recent strides in AI are making it even more relevant. The company has been developing AI agents that enhance customer engagement, and the results are impressive. For instance, General Mills was able to triple its customer engagement using Salesforce's AI solutions. This kind of success story shows the potential for Salesforce to drive growth across industries, making it a compelling investment. While its sales growth may be slower compared to others, the deployment of AI technology could accelerate growth in the near future. With its current valuation, Salesforce is a stock that could pay off well for those who invest now. Supermicro, a data center play. Supermicro, SMCI, is another standout in the tech sector, particularly for those focused on data centers. Despite some past allegations that caused a dip in its stock price, the company's fundamentals remain strong. With significant revenue growth expected, Supermicro is positioned to benefit from the ongoing expansion of data centers. Trading at a low valuation compared to its revenue growth, this stock has the potential to double its current value as the demand for data solutions continues to soar. Investors should keep an eye on Supermicro as it navigates through its challenges and capitalizes on the growing need for data infrastructure. Price target updates for previous high performers. As we look at the stocks that have performed exceptionally well recently, it's important to reassess their price targets. Stocks like Palantir Technologies, SoFi Technologies, and SoundHound AI have had remarkable journeys, but their valuations have changed significantly. Palantir, for instance, has seen its price drop by 20% from its peak. While it's a strong company with a solid foundation, it's currently trading at a staggering 62 times its revenue. For it to be an attractive buy again, we might need to see it drop to around $52 per share, which would equate to a more reasonable 15 times this year's expected revenue. SoundHound AI has also shown impressive gains, skyrocketing 1,500% at one point. However, even with a drop, it's still trading at 33 times its projected revenue. A target price of about $9 per share would make it more appealing, as it aligns closer to fair value for its growth potential. SoFi Technologies has had its ups and downs, too. While it was a steal when trading at 8 times book value, now at 2.6 times, it's important to be cautious. A target price of around 10.30 PA would make it a contender worth considering again. I've been using Interactive Brokers for my own investments, and I found their platform to be quite helpful. The link is in the first link of the video description if you're interested in exploring further. Analyzing the financial sector. Opportunities ahead. The financial sector is gearing up for an exciting earnings season, with banks expected to report a whopping 39% increase in earnings compared to last year. This could signal a strong recovery. The overall sentiment is shifting positively, especially with deregulation and an uptick in M&A activities on the horizon. Big names like JP Morgan, Goldman Sachs, and Ally Financial are on many investors' radars. As they kick off the fourth quarter reporting season, their results could set a positive tone for the market. This is a time to pay attention, as solid performance could boost investor confidence and encourage a market rally. With the financial sector's potential for growth, it's essential to keep an eye on these companies and consider their positions in your portfolio. Value plays here could lead to significant gains as the economy continues to recover. Challenges facing automotive stocks. The automotive industry is facing headwinds, particularly with the rise of Chinese manufacturers. These companies are ramping up production and aggressively lowering prices, which could lead to a challenging few years for traditional automakers. China's domestic production capacity is staggering, with estimates suggesting they could produce an additional 14 million cars. This oversupply could flood the global market with cheaper vehicles, putting pressure on foreign automakers. While some companies like GM have performed well, others like Ford and Toyota have seen significant losses. Investors need to be cautious. The market dynamics are shifting, and the competition is heating up. With tariffs and the potential for market share loss, it's crucial to reassess any investments in this sector. Keeping tabs on how these changes affect your portfolio will be important in the coming months. Potential gains from U.S. hardware makers. Looking at the hardware sector, There are promising signs for U.S. companies like Netgear and Cisco, with potential bans on Chinese-made TP-Link routers due to security concerns. These companies stand to benefit significantly. Netgear and Cisco could see a surge in demand as businesses and consumers look for secure alternatives. This shift could lead to increased revenue and market share, making them attractive options for investors. As the market evolves, these hardware makers might emerge as key players. Keeping an eye on their performance and market strategies could reveal some hidden gems in your investment portfolio. Inflation concerns. Is the fear justified? Inflation has been a hot topic lately, but is the fear truly justified? While we've seen persistent inflation, a closer look reveals that housing costs are stabilizing, which could ease some of the pressure. Many believe that the current inflation fears might be overblown. If tariffs and trade issues can be managed, we could see a return to more stable pricing. The market has a tendency to react to past fears, and this could be one of those moments. As we navigate through these concerns, it's essential to stay informed and be ready to adapt your strategy. The market is always changing, and being proactive can help you make the most of any situation. Looking ahead. Earnings season and market outlook. As we enter the earnings season, expectations are high. Companies in the S&P 500 are projected to report an impressive 11.9% increase in earnings compared to last year. This could provide the boost the market needs to recover from recent downturns. While some companies may express concerns about the strength of the dollar affecting foreign profits, the overall outlook remains positive. Low inflation, a strong job market, and potential tax cuts could all contribute to a supportive environment for stocks. It's an exciting time to be an investor. With the right mix of research and strategy, you can navigate through these earnings reports and position yourself for potential gains in the coming months. For those interested in learning more about investing, I've had a positive experience with Interactive Brokers. The link to their platform is in the first link of the video description.